you leave the UK permanently and become a non-UK resident, have you considered what will happen to your pension, what will happen to your ISAs, what will happen to your dividends, happen to your interest, and even have you considered what will happen to assets and investments located in the UK that you sell? This is what this video is for. And so in today's video, I'll be answering questions such as, can I contribute into my ISA account as a non-UK resident? Do I still get the tax-free benefit the ISA offers? Can I still contribute into my pension as a non-UK resident? Can I receive my state pension as a non-UK resident? Can I withdraw my personal pension as a non-UK resident? If I receive income such as dividend or interest in the UK, how will I be taxed? If I sell a rental property located in the UK, how will I be taxed? If I sell shares located in the UK, how will I be taxed? Stay tuned and don't skip any part of this video. If this is your first time here, my name is Amma, a chartered accountant and a tax professional from AB & Co Accounting and Tax Services. On this channel, we cover topics around legal ways you can use to reduce your tax, how to manage your finances in a way that will help you keep more of your hard-earned money in your pocket, and accounting issues in general. So let's try to answer the first question. If I leave the UK permanently and become a non-UK resident and I have an ISA account in the UK, what will happen to it? If you have an ISA in the UK and you are classed as a non-UK resident because you've left the UK permanently, your ISA will stay in the UK intact. Nothing will happen to it. However, unless you are an employee from the Crown or a spouse of an employee from the Crown, you will not be able to contribute into the ISA whilst you remain a non-UK resident. However, you can continue to benefit from the tax-free benefits that the ISA offers. If you withdraw any interest, dividend, or anything you receive within the ISA, will continue to be tax-free. So you enjoy the tax-free benefits that the ISA offers. So even if you live abroad, you can still transfer your ISA from one provider to the other without any issues at all. If you return to the UK and become a UK resident again, you can continue to contribute into your ISA account as you did before leaving the UK permanently. But before you leave the UK permanently, it's highly important you speak to your ISA provider. So that is the first question. If you have found any value at all in this, kindly subscribe to our channel to help us reach more people. And don't forget to hit the like button to send us a signal that we are providing value. Now let's consider the next question. If you leave the UK permanently and become a non-UK resident, what will happen to your pension located in UK? I'm going to break this into two. I'll talk about the state pension and talk about your private pension. So for state pension, as long as you have contributed at least 10 years of national insurance in the UK, you will qualify for state pension. We have a video that details where to check if you qualify for state pension, how to ensure you qualify for state pension, and everything about state pension and your private pension. Link it above here and also in the description. For state pension, as long as you have contributed at least 10 years of national insurance in the UK, you qualify for state pension. And so even if you have left the UK permanently and have become a non-UK resident, you will still be able to claim your state pension when you reach the state pension age. If you want to claim the state pension, you need to speak to the International Pension Center. Now let's consider where you pay your tax as a non-UK resident on your state pension. Remember, your state pension is a taxable income, so it's taxed in the UK. If you are a non-UK resident, you may pay tax in the UK and in the country that you are resident. When that happens, you can claim a tax relief. However, if UK has a double tax treaty with the country that you reside as a resident, you can claim to receive your state pension gross by applying for what is called NT, no tax code, using the DT individual form. Once you complete the DT individual form, you submit it to HMRC and HMRC approves it, you will no more be taxed on your state pension. You receive your state pension gross in the country where you reside, and then you speak to a local advisor to advise you on how to pay tax on your state pension received from the UK. That is state pension. Let's move to your personal pension. And for personal pension, for a non-UK resident with no UK relevant earnings, you can contribute up to £3,600 per tax year, provided the pension scheme was set up when you were a UK resident, and provided you were a UK resident for one of the previous 5 tax years prior to the tax year you are making the contribution. So you can continue to contribute this amount into your personal pension, provided these 2 criteria are met. You can decide to transfer your personal pension scheme to a qualifying, recognized overseas pension scheme, but you may incur 25% tax on a transfer. So speak to your provider to make an informed decision before leaving the UK. This is personal pension. The next question you may be asking is, what will happen to my dividend that I'll receive outside ISA? What will happen to my interest I will receive outside ISA as a non-UK resident? This is what will happen. As long as you remain a non-UK resident, if you receive any interest, if you receive any dividend, these are classed as disregarded income. As long as you remain a non-UK resident, you won't pay any UK tax on these. But if you return to the UK and become a UK resident within 5 years, these become taxable immediately. So this is your next question answered. Let's consider income received from rental property. What happens to that as a non-UK resident? If you are a non-UK resident and the property is located in the UK, as long as the property is located in the UK, any income generated from the rental property will attract UK tax. You will need to register as a non-resident landlord, and you need to be declaring all your rental income and expenses to HMRC, and you need to pay the right amount of tax on time. It may well be that you will pay tax on the same profit in the overseas country that you reside. You need to speak to the local advisor to advise you on that. Now let's move on to capital gains tax as a non-UK resident with UK assets. But before we discuss this, if you have found any value at all, please subscribe to our channel to help others find us. Please hit the like button to send us the signal telling us that you are getting value from our videos. Please subscribe to our channel if you want more of such videos. Right, let's consider what happens to assets you sell in the UK whilst you are a non-UK resident. So if you're a non-UK resident and you sell shares, as long as you remain a non-UK resident, the gains will not be taxed in the UK. But again, if you return to the UK within 5 years, the gain will become taxable in the UK immediately. On the other hand, if you have rental property located in the UK and you sell it whilst a non-UK resident, because the property is located in the UK, you will pay capital gains tax on any net gain arising from the sale. You will need to declare the gain to HMRC and pay the necessary tax, even if you are a non-UK resident. This is what will happen to your assets and investments held in the UK for capital gains tax purposes. because we know how important it is to get it right before you leave the UK, to ensure you are not hit by a big tax bill, and to also ensure you get your pensions, right? We have prepared a video here for you. Please watch it. I hope you have found this video useful. Please subscribe to our channel for more videos such as this. And don't forget to hit the like button. And don't forget to share your comments and experiences in the comment section. Thank you for watching.